Hello and welcome back to the Rekt Capital channel. Welcome to today's video. I hope you're having an amazing day wherever you are in the world. Let's look at some trading intangibles. This is going to be the beginning of a new series on the channel, and it's essentially the psychology of trading, because it's these intangible qualities that make all the difference in your trading approach. Because we can learn technicals and we can understand blockchain, we can learn these technicals and fundamentals, but in my personal opinion, the biggest edge that you're going to get in the market is by understanding yourself. Socrates said once upon a time, know thyself, because of course living an unexamined life is a life not worth living. And that's a very interesting philosophy, because if you understand yourself, you understand your moods and what they mean. If you understand your habits, if you understand your emotions and why you're feeling this way in certain trading scenarios, this will give you an edge in the market, but not only in the market, also in life. Self-awareness is the key to living a better life, because you understand yourself, how you react in certain situations, and if you understand yourself, you can navigate the market much more effectively, because you understand not only yourself, but you understand the motivation of others as well. So that's a very crucial skill in the market. So let's talk about how mood impacts your trading. And of course, guys, if you enjoy these sort of videos, please leave a like, and of course subscribe to the channel for more videos in the future. I'm more than happy to continue producing this sort of content as long as it adds value for you. But before we dive into today's video, remember that this Thursday, February 20th, 7 p.m. UTC, altcoin hype cycles. This is what I'm going to be talking about in the webinar this week. Pre-order your spot at the webinar. There's a pre-order discount, so the link is in the description down below or in the pinned comment in the comment section. Reserve your spot at the webinar. It's going to be awesome. If the Bitcoin halving webinar from a few weeks back is anything to go on, then we're going to see a lot of engagement. We're going to see a lot of questions, and we're going to look at different ways that we can make the most of this alt season. So reserve your spot at the webinar this week, this Thursday, 7 p.m. UTC, February 20th. Reserve your spot and get the pre-order discount, and I'll see you there. But in the meantime, let's dive into today's video. How mood impacts our trading? Well, it's very important, because emotions govern a lot of our trading, right? Most people trade emotionally. 95% of the market loses money specifically for this reason, because they FOMO, they panic sell, they give in to their emotions, and they'll trade emotionally on a daily basis, losing money on a daily basis. So most traders lose money, and that's because they trade emotionally. Well, what are these emotions? Well, emotions conceal motivation. So if we're feeling attracted to someone, then that's supposed to make us more likely to potentially mate with them. Or if we're feeling fearful, then that's a proxy for us trying to avoid something so that we're not in danger. So all of these emotions stem from the fact that they have a hidden certain motivation. So if we're in a sad mood or an anxious mood or a fearful mood, these motivations are going to impact our trading in very different, fundamentally different ways. So it's very important, just like I said at the beginning, to understand how mood can impact our trading, because it can help us understand all these different bad habits that we may have picked up along the way in our education as to trading the markets. And it's very important to just try and remedy those trading habits. So let's dive into how sadness can impact your trading. And of course, guys, if you'd like to read this article in a bit more detail, it's on my website rektcapital.co in the articles section. So if emotions conceal motivation, then if you're sad, you're more likely to have a certain motivation, and that motivation is going to be mood reparation, because whenever we're feeling a little bit sad, we feel like we're missing something. That's what scientists conceptualize sadness as. And if we're feeling like we're missing something, then we're going to look for reward somewhere, right? So another way that sad people have a tendency to feel better about themselves is by helping others. And this is interesting, because we're altruistic in our nature. We like to help people, and by helping other people, we feel better about ourselves. And that's interesting, because this is a form of mood reparation. So if we're going to be guided in our trading by seeking out reward just to elevate our mood, this is potentially disastrous for our portfolio, because if we're feeling a little bit sad when it comes to our mood, then we're going to prioritize feeling better about ourselves rather than making money in the market. And that's very bad, because we have to realign those priorities if we want to be profitable in the market, because otherwise we're going to want to repair our mood by FOMOing, for instance. Because if you FOMO and you see a strong green candle to the upside, you're going to really feel good about yourself because you're suddenly making money. But that's not a good trading strategy to adopt, because FOMOing often leads to losing money, even though you might make a little bit of money in the beginning. And the same thing goes for low probability setups, because these setups look like they've bottomed after a 95% retrace, for instance, and it looks like the prospect of reward is very, very enticing and very, very tempting. We tend to forget that these coins might never recover, but still we feel like that's a very good bet. So low probability trades are more likely to make us feel good about ourselves, because we start to imagine all these different profits that we could potentially get from them, even though this project might be dead in itself, and that the website to this project isn't functioning anymore. And that's simply because anticipating potentially massive gains is a pleasurable experience in of itself, and low probability trades are the best at providing those. So if you're in a sad mood, if you're feeling a little bit down, you're more likely to accept outsized risk in expectation of a huge payoff. So sad traders are more likely to seek those high risk trades out. But also, if you're in a sad mood, you're more likely to hold past a ideal sell point. Even though the rally is already exhausting, you're more likely to hold, because holding and seeing those gains pile up is rewarding to you, and it's more likely that you're going to hold on to a trade that you should ideally sell because the rally is exhausted, but you're going to keep holding on anyway because you're in profit, and that's something that's really enjoyable and improves your mood. So it's these sort of things that sad people, or at least people with a sad mood, tend to do in their trading, because ultimately it's all about mood reparation rather than profit maximization. So that's quite interesting, because anxious people have a different set of motivations compared to sad traders. So sad traders are more focused on mood reparation, whereas people who are anxious in their trading will prefer low risk, low reward options. And that's quite bad in this bull market, because if you're going to be looking for low risk, low reward options, you're going to miss out on a lot of gains, because in this bull market, holding is the ideal strategy, and if you're going to be in an anxious mood, you're more likely to just quickly cut your position because you're not really enjoying that risk. So if you're anxious in your trading, you're going to cut positions very quickly just to avoid that uncertainty, because fundamentally anxiety stems from high uncertainty and a perceived lack of control. So if a coin is going up to the upside, you're not really feeling in control, especially if you don't understand TA, and actually learning technical analysis is going to help you really understand how to navigate the market, because you're already understanding the market within sets of parameters rather than just a mess of price action that you don't really understand, and you just give into your emotions and trade the market emotionally without any technical analysis. So anxious people are more likely to sell too soon, set stop losses that are too tight, and choose non-volatile options with limited prospect for reward, and miss out on profitable opportunities just because they are very risk averse. They don't want to take on the risk, but as we know in trading and investing, if you don't take on the risk, then you have no chance at reward. So if you're in an anxious mood, you're more likely to look for low risk, high certainty choices rather than low risk, high reward choices. And that's quite interesting, because when we compare this to sad traders want the excitement, they want the rewards, so they're more likely to FOMO. Anxious traders don't want any of that. As long as they can get a certain trade that will give them 5% or even 10%, they're happy with that. They don't want excitement, they just want certainty. And that's quite interesting, because the motivation for trading has to be profitable. But if you're looking for mood reparation or you're looking for high certainty, that's going to impact your trading in very different ways and not very positive ways at the same time. And lastly, let's look at how fear impacts your trading. Of course, I'm sure that we're all familiar with this. If we're feeling in a fearful mood, not only are we going to overextend our retracement targets, we're going to get lost in bearish euphoria, thinking that Bitcoin's going to 5K or 3K every time we see a Bitcoin dip. But we're also going to be very risk averse. So it's not very likely that we're going to be taking any positions when the market has retraced. And this is very understandable because people, if they're fearful, they tend to hide their heads in the sand. This is called the ostrich effect. People just hide their head in the sand and they just want to avoid the market altogether. This isn't necessarily the best way about it, because when we're thinking about trading and investing, buying the fear is the best thing that you can do, because extreme fear precedes financial opportunity. And we've seen this many times over. Every time the market is extremely fearful, that's the best financial opportunity to make the most of. But of course, whenever we're fearful, we're going to be very unrealistic in our price assessments, and also we're going to over exaggerate our risk towards an altcoin or Bitcoin, even though those pullbacks are the best financial opportunities that you can take with the best risk to reward ratio. And if you're feeling fearful, you're most likely just going to miss out on a dip. And in this bull market, the best thing is that we'll see a lot of dips, and these are going to be very good chances just to reload our positions at lower prices. And the thing is, most people can be fearful on these retraces, but as long as you are not, then you're going to profit from those retraces, because after a dip comes an uptrend. And that's where facing your fear really shows an effect, because if you face your fear, you buy the dip and you take advantage of that financial opportunity, the uptrend that comes afterwards is that reward for facing yourself, facing your mood and facing those emotions and going against them. And trading is all about knowing yourself, but also sometimes going against yourself, going against these emotions. And now we understand how these different emotions impact our trading. And if we can journal these emotions, if we can journal at different times in the market, oh, I'm feeling a bit sad, or I'm feeling a bit anxious, or maybe I'm hungry, and this is more likely to make me fearful, because when we're hungry, we tend to become a little bit more negative. Then these are all things that you should be journaling. And by journaling, you're going to learn a lot more about yourself, and this is going to really help you in your trading and investing. And having said that, that's just about it for today's video. I hope you enjoyed it. Please leave a like if you enjoyed today's video. Subscribe for more videos. And of course, in the description link down below, there is a link that will give you a pre-order discount to this week's altcoin hype cycle webinar. This is where we're going to talk about how to make the most of this alt season. February 20th, 7 p.m. UTC, live. Of course, if you can't make it live, we're going to be recording this webinar, so feel free to make the most of this pre-order discount. The link is in the description down below, but also in the pinned tweet. But in the meantime, that's about it for today's video. I'm Rekt Capital, and I'll speak to you soon.